Hello, this is Mark from tradingform.com and welcome to this video on how to backtest a trading strategy using Excel. What I'm going to demonstrate in this video is how easy it is for anybody to test their own trading strategies, pretty much any type of trading strategy on any market and any time frame. What I've got open on the screen in front of me is a template for testing a trading strategy. Now, we always want some sort of a template to work from. It makes the process a lot easier and a lot more reliable. Now, what I've got here is a trading-formed backtest model, which is a great way for anybody really to test their own strategies in Excel. Now, there is a link on the screen if you'd like more information about this backtest model. Now, what I'm going to do now is go through the different steps that we need to build up the model and get to the results of the trading strategy. Now, the first thing that we need for any backtest, any historic backtest, is some historic data. I've got some here in another spreadsheet, and this is the euro US dollar. And what we can do when we've anytime we've got two spreadsheets is just simply copy and paste the data from one to the next. This is a shortcut really for getting the information in there quickly. So without very much trouble at all, we now have the euro US dollar forex pair on the daily time frame. Now, the next step is to decide when we are going to enter a trade. Now, in this demonstration, I'm going to use a few different technical indicators. The first of these is the exponential moving average, or EMA. Now, I'm just going to demonstrate how to calculate the EMA. I don't normally work these out each time, but it's quite simple to do, so I'm just going to show you how it can be done. Now, we're using a 200 period EMA. The first thing to calculate, you need to calculate an EMA is a factor here. I'm going to show you how we use this factor. Now, an EMA over 200 periods, on any EMA in fact, we're going to need a previous average. And we work out our previous average using the formula in Excel equals average. Okay, so this is also called for most traders the SMA, or simple moving average. Now, the next value, we're going to use a slightly different formula, and this is the current close minus the previous average. So now we've got this value, what we do is we multiply it by our factor here, and then we press F4, which makes this an absolute reference cell, so all the cells below are going to refer to this value. And then finally we add it to the previous value, and we press enter, and we have our formula here. Now we just copy it down by double clicking on the bottom right hand corner of the cell. Now, the next indicator that I want for this model is another popularly used one, and that is the stochastic oscillator. Now, the stochastic as well is nice and easy to calculate using Excel. I did mention it before, it's not necessary to calculate these indicators every time. I do actually have an ebook, in fact 2 ebooks available that have got these and a whole load of other technical indicators calculated in Excel, and you just need to copy and paste them, and that's what I do most of the time. But in this demonstration I'm going to show you how we can do it. There is a link on the screen if you want more information about the technical indicator ebooks that I have available. Okay, so the first thing we need for the stochastic oscillator is the recent highs I'm using 14 periods, which is pretty standard, and also the recent lows, again over the same 14 periods. Now I just need to drag these down a little bit, and then I can just double click and they go down automatically. Right, now we have the highs and lows. We're going to calculate the value of %K. Now %K uses a formula that works out where the current close, how the current close relates to the most recent highs and the most recent lows. So we do that by subtracting the current close from the most recent lows. We divide that by the highs minus the lows, and we multiply it by 100. Okay, so we usually use a slower version, and that's what I'm going to use today. I'm just going to call it %D slow, and I'm going to slow this down because the stochastic changes very quickly. So I'm going to use a simple moving average of 5 of these values to get my %D slow. And finally we want, sorry, I've called that %D, that is actually %K. And then finally what I want is %D, or the signal line. I'm going to use 3 periods again just to make the signal line. That is the stochastic oscillator calculated using Excel. Now I've got one final technical indicator to go, and I'm using this not to identify an entry but to calculate the distance of my profit target and my stop losses. And this is the average true range, or ATR. So the ATR is a very handy indicator that gives us a sense of recent volatility. And once again, we can calculate this nice and easily using Excel. Now the range is, the normal range would be considered the high minus the low of that bar, but the true range actually looks at the fact that there can be gaps between bars. So we use a formula that looks at, first of all, the high minus the low, and then we look at the absolute value of the high minus the previous close, and the absolute value of the low minus the previous close. So there we have the high and the low minus the previous close. The next value we can enter is the true range. Now the true range is the greatest of any of these three. So again, we use the formula equals max to work out the true range. Now the average true range is an average value of the true range, and there are a number of different ways that you can calculate this average. I think the best way to do it is just to use another moving average, use another exponential moving average, because it's as good as anything and it is easy to calculate. So once again, we calculate our EMA factor. Next, we calculate our initial average, and then we calculate our first EMA, current value minus the previous average, multiplied by our factor as an absolute value, and then we add it to the previous average. Right, so we have our technical indicators. Normally it wouldn't take even as long as this. It's very simple just to copy and paste these calculations for the indicators straight into the model. Okay, so the next thing I'm going to look at is how to enter a trade. Now, in these trade-informed backtest models, I enter long trades in this first column here called trade long. Now in the template here, I'm going to look at the first criteria. When we decide how we're going to enter our trades, we need to think about them as a series of logical steps. So this type of strategy is identifying the trend and enter when the price is strengthening. I'm going to do that by close greater than the EMA. So we're saying that whenever the close is greater than the EMA, the trade direction is always going to be long. Now the next thing I'm going to do is go into that. The next thing I'm going to do is use this stochastic oscillator. And I'm going to use two values that are familiar to most people, the 20 and the 80 level. These are generally and commonly used to identify oversold and overbought areas. They're not fixed, but they are a good starting point, and I'm going to use them for this strategy. Now we want to know the stochastic value that I'm using is the %K slow. So I'm going to look to the cell in this bar, and I'm going to look at it for this value greater than 20, which means that it's moving out of the oversold area. Now, because we want it to be a crossover of this 20 level, we have to also look at the previous level, previous value, the previous bar's value of %K. And in this case, I want that value to be lower than 20. Okay, there are my entry criteria. Now we've got another one here that's sitting here, and the reason for this is I only want to enter one trade at a time. Now doing things like this involves a little bit of complexity, and this is why you want a template with certain things always in the same place. In a trade-informed backtest model, this column here signifies that there's a trade already running. If there's a trade already running, we do not want to open a new trade. So this is why we have this final logical statement. Now I can double click on this and it will copy it down all the way below. Right, we want to also have short trades. I'm going to start from exactly the same point, except now looking for short trades. First thing I'm going to do is I'm just going to copy, this is a template, so we can very easily copy and paste the starting template. Now I want to do the same thing but in reverse. So this time I want my closing price. I'm looking for when the closing price is below the 200 period EMA, I only want to go short. So I do that by close price below EMA. Now the next thing I want is %K slow. This time I want it to be lower than our overbought area. So it's gone into an overbought area and we can see the price weakening. So I'm going to use 80 for that value. Once again, we want this to be a cross below, so we have to look at the previous period, and this must be greater than that value, 80. Now we have to have the same criteria saying we'll only get one long or one short at a time because we're using the EMA as a filter. but I don't want two short trades to open. So I'm going to look at my short trade running column, and I'm going to I want this to be equal to 0, signifying that there's no trade running. Again, double click to the cells below. Right, now I can scroll down a little bit. Always a good idea whenever we're testing, any form of testing, make sure we've inputted everything correctly. Well, I've got a long trade here. If I can go across here, I want to be sure that first of all the close is greater than the EMA. And we can see that, well, it is greater than. The next thing I want to know is has the %K slow just moved above the 20 line? Well, again, we can say yes, it has. Finally, we can see that there was no trade previously running. Right, that one was correct. If I go down a bit, I wonder if we can find a short trade. Well, we've had lots of long trades. Obviously, the market was strong for that period, but we can see here a sample of a short trade. Now, it opened on this day, the September the 26th, 2008. Now, we want to know that the closing price was lower than the EMA. And we can see just by eye quite easily that yes, it was. Now, if I go over here to the %K slow, we can see also that the %K slow had just moved from above to below the 80 line. So that seems correct. And also, there was no previous trade running. Okay, so just for a very quick glance, it seems that the model is working correctly. Now, because this is a template, we have the advantage of some of these metrics already calculated in. And I'll just explain some of the ones that I'm using here. Now, over here on the left, we're using our ATR that I calculated earlier. Now, the ATR is a nice measurement of volatility. So it moves up and down depending on what the market is doing. And I've already entered some values in here. I've got a profit target of 10. We could alter this to any value. And we can see quite quickly how it affects our results. Now, I'm using a stop loss and in addition to that a trailing stop. So this stop loss here will set the absolute maximum that we're willing to lose on any one trade, and our multiplier here, and our trailing stop multiplier here, will move in the direction of the trade. Now we can change some values here. Now this is one of the advantages of using a spreadsheet like this. We can actually, I'm just going to demonstrate it here, we can cut this cell here. We're not copying here, we're cutting, and paste it in here. And now we can actually dynamically adjust this value and see what would happen with a different level of EMA. So I can change that to 50 or 25 or 500 or whatever value that we want to test. Excel is very flexible, as I said. We can cut these, we only just put these values in, if you remember, just during this. We can cut them and take them out of there and just stick them in here. I'm just going to repair the formatting there, and we can just change this level. So we don't want to enter at 20, we want to enter at 10, or we enter at 30. We can make one of them always the reverse of the other, or we could set them at separate levels. So I could change this to be 40, and the short entry level would change to become 60. And we can see by doing something like this, we're likely to end up with more trades. We can also, in any spreadsheet, and certainly in a trade-informed spreadsheet, we can have different ways of closing the trades. We can use a stop loss or a profit target, or we can use the stochastic oscillator itself to close the trade. It's quite easy to do this. What I'm going to do here is, just to demonstrate it, we're looking at long trades here, so I'm going to say if the stochastic moves from a value from 20 up to our short entry level of 80 to close that trade. So I'm going to start with the %K, and I'm going to say if the %K slow is greater than this value here, the short entry level, then we're going to close this trade. I just need to double click here, and we can see that it's automatically adjusted to change the trading strategy, and that is dynamically adjusted to change our results. These metrics are quite simple to calculate. They're all set up in a trade-informed model. We've got the gross number of winning trades, gross losing trades, and the net profit. The profit factor is gross winning trades, absolute value of gross winning trades divided by gross losing trades. You can calculate all sorts of different things. What's interesting maybe for this trading strategy is we have actually quite a high winning percentage, but that's only come about since I've changed this closing criteria here. If I took that back out again and updated the model, we can see we've actually got 48.1% of our trades are winners, which means of course that almost 52% are losers. But we can see that that doesn't matter for this particular trading strategy. We've got the largest winning trade here of almost 50,000, which was it's about half of our starting capital. And that, even more importantly, our average winning trade is more than twice as much as our average losing trade. Now this is just a sample trading strategy. All I'm doing here is demonstrating how quickly and easily we can come up with an idea, we can put it into Excel, and we can test our trading results. If we have another idea, we want to try something else, try a different type of filter or a different type of close or a different entry, we can very easily adapt the model to reflect these results. So I hope you found this video useful. If you'd like more information about backtesting with Excel, with calculating technical indicators, and about the financial markets in general, please go to www.tradeinformed.com.